Welcome back. So far, we've covered the fundamentals of payments, from the history of payment instruments to the key players in the ecosystem and the regulations that govern them. In this chapter, we'll explore the dynamic landscape of modern payments, focusing on the challenges and opportunities that businesses, consumers, and regulators face today. The payments industry is evolving rapidly, with new technologies, consumer behaviors, and regulations creating both exciting opportunities and pressing challenges. By the end of this chapter, you'll have a clearer understanding of how the payments sector is navigating this landscape and what the future holds. Current state of the payments industry. The global payments industry is undergoing significant transformation, driven by digitalization, evolving consumer expectations, regulatory changes, and technological advancements. The industry is moving away from traditional payment methods like cash and checks and towards digital-first solutions, such as mobile payments, digital wallets, and real-time payment systems. Some key trends shaping the current landscape include the increasing use of mobile and digital wallets, the adoption of real-time payments and blockchain-based systems, the rise of fintechs and big tech players offering innovative financial solutions, growing concerns around data security, fraud, and privacy, expanding regulatory requirements to ensure transparency and protect consumers. Let's now look at the major challenges faced by the payments industry, followed by the opportunities that present themselves as the industry continues to evolve. Challenges in modern payments. 1. Security and fraud. As the payments ecosystem becomes increasingly digital, security risks grow. Payment fraud, data breaches, and cyber attacks are significant concerns for businesses, financial institutions, and consumers alike. Key security challenges. Data breaches. Hackers target sensitive customer information, including credit card details, passwords, and personal identification. Payment fraud. Criminals use techniques such as card not present, CNP fraud, account takeovers, phishing, and social engineering to exploit vulnerabilities in the payment process. Evolving threats. The rise of sophisticated fraud techniques, including deepfakes and AI-powered cyber attacks, makes it increasingly difficult for traditional fraud prevention systems to keep up. How to address the challenge. Implementing multi-factor authentication, MFA, and tokenization to protect cardholder data. Leveraging artificial intelligence, AI, and machine learning, ML, to detect fraudulent activities in real time. Strengthening industry standards such as PCI DSS and strong customer authentication, SCA, as required under regulations like PSD2. 2. Regulatory compliance. With the rise of digital payments, regulatory bodies are putting in place more stringent rules to ensure consumer protection and market stability. While these regulations are critical, they can also be challenging to navigate. Key regulatory challenges. Global fragmentation. Different countries and regions have varying regulations, making it difficult for global businesses to stay compliant across all markets. Data privacy laws, regulations like GDPR, General Data Protection Regulation, in Europe have raised the bar for how consumer data is stored, shared, and processed, adding complexity to compliance requirements. AML and KYC requirements, stricter anti-money laundering, AML, and Know Your Customer, KYC regulations require businesses to implement comprehensive identity verification and monitoring systems. How to address the challenge. Using RegTech, regulatory technology solutions to streamline compliance processes and monitor transactions for suspicious activity. Maintaining transparency with customers regarding data usage and ensuring their consent in line with data privacy laws. Collaborating with regulators to influence the development of fair, industry-wide standards. 3. Fragmented payment systems and interoperability. The payments ecosystem is made up of numerous networks, platforms, and technologies, leading to challenges with interoperability. Payment systems, particularly in cross-border transactions, often lack seamless integration. Key interoperability challenges. Cross-border payments. Sending money internationally remains slow, expensive, and inefficient, especially for smaller businesses. Payment method. Fragmentation. There are many different payment methods, cards, digital wallets, mobile payments, cryptocurrencies, and not all merchants accept every option. Legacy systems. Many financial institutions and merchants still rely on outdated legacy systems that are not compatible with modern digital payment infrastructures. How to address the challenge? Adoption of open banking and API-based solutions to enhance interoperability between financial institutions and fintechs. Developing cross-border payment standards to facilitate faster and cheaper international transactions. Investing in the modernization of legacy payment systems to ensure they can handle the volume and complexity of digital transactions. 4. Competition and market saturation. The payments market is becoming increasingly crowded, with traditional banks, fintechs, big tech companies like Apple, Google, and Amazon, and even telecommunications providers vying for market share. As new players enter the space, competition intensifies. Key competition challenges. Disruption by fintechs. Agile fintech companies are often more innovative than traditional banks, offering customers superior user experiences, faster services, and lower costs. Big tech dominance. Big tech companies, with their vast customer bases and access to large amounts of data, have an inherent advantage in developing and scaling payment solutions. Merchant relationships. Building and maintaining relationships with merchants is increasingly competitive, with players offering lower fees and better incentives to attract businesses. How to address the challenge? Banks and traditional financial institutions should focus on collaborating with fintechs and big tech to enhance their offerings, rather than competing directly. Embracing open banking to foster innovation and improve customer experiences. Focusing on creating value-added services such as loyalty programs, personalized offers, and seamless user experiences to differentiate from competitors. Opportunities in modern payments. While the challenges are significant, the opportunities for growth and innovation in modern payments are equally abundant. Let's explore some key areas of opportunity. 1. Real-time payments, RTP. Real-time payments, RTP, represent a major advancement in the way transactions are processed. RTP systems allow consumers and businesses to send and receive money instantly, 24/7, without the delays inherent in traditional bank transfers. Opportunities in RTP: faster settlements. Businesses benefit from immediate access to funds, improving cash flow management. Consumer convenience. Customers can make payments and access their funds instantly, enhancing the overall payment experience. Use cases: real-time payments are ideal for emergency payments, gig economy workers, peer-to-peer, P2P payments, and real-time payroll disbursements. 2. Open banking. Open banking is revolutionizing the financial services industry by giving consumers greater control over their financial data and allowing third-party providers, TPPs, to offer innovative payment solutions. Opportunities in open banking. Enhanced consumer choice. Consumers can access new payment options, budgeting tools, and personal finance management services. Innovation. Fintechs can leverage open banking APIs to create services that cater to specific consumer needs, driving competition and innovation. Personalization. Open banking allows for more personalized financial experiences, with consumers receiving tailored offers and recommendations based on their spending patterns. 3. Blockchain and cryptocurrencies. Blockchain technology and cryptocurrencies are disrupting the payments landscape by offering decentralized, transparent, and secure payment systems. While still in their early stages of adoption, these technologies have the potential to revolutionize cross-border payments, remittances, and B2B transactions. Opportunities in blockchain and crypto. Lower costs. Blockchain eliminates intermediaries, reducing transaction fees, especially for cross-border payments. Transparency. Blockchain's immutable ledger allows for clear and secure transaction records, reducing the risk of fraud. Global reach. Cryptocurrencies enable frictionless international transactions, particularly in regions with underdeveloped banking infrastructures. 4. Artificial intelligence and machine learning, AI/ML. AI and machine learning are unlocking new possibilities in the payments industry by improving fraud detection, enhancing user experiences, and optimizing payment processes. Opportunities in AI/ML. Fraud prevention. AI/ML algorithms can detect anomalies and prevent fraud in real time, improving security and reducing false positives. Personalized experiences. AI can analyze consumer data to provide personalized recommendations, offers, and payment options based on individual behavior and preferences. Process optimization. AI ML can be used to automate routine tasks, such as transaction routing and compliance monitoring, improving operational efficiency. 5. Sustainable payments. Sustainability is becoming a key consideration in the payments industry. As consumers grow more environmentally conscious, there is an opportunity for payment companies to align with these values by adopting eco-friendly payment practices. Opportunities in sustainable payments. Eco-friendly payment cards. Issuers can offer cards made from sustainable materials, reducing the environmental impact of plastic cards. Carbon offsetting. Payment platforms can offer features that allow consumers to offset the carbon footprint of their purchases. Paperless solutions. Digital payments eliminate the need for paper receipts, statements, and invoices, contributing to sustainability efforts. Conclusion and preview. In conclusion, modern payment systems have revolutionized the way we conduct financial transactions, offering greater convenience, security, and efficiency. However, they come with their own set of challenges, including issues related to cybersecurity, fraud prevention, and the complexity of integrating various payment systems across different regions and platforms. The rapid evolution of technologies such as blockchain, mobile payments, and digital currencies presents exciting opportunities for innovation in the payment sector. While traditional payment methods are still prevalent, the demand for seamless, real-time, and borderless transactions is driving the adoption of newer solutions. Businesses must stay ahead of the curve by embracing new technologies, addressing regulatory challenges, and ensuring the security of their systems to provide a trustworthy experience for consumers. Ultimately, the future of payments will be shaped by a combination of innovation, collaboration, and adaptability to meet the changing needs of the global market.